It's Tuesday and you're watching FreightWaves Now. I'm your host Anthony Smith and we have Andrew Cox with us with a shipper update. But first we're going to cut to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Welcome to this Tuesday carrier update presented by PowerFleet. I'm Zach Strickland. So we thought those volumes and tender rejection rates were starting to level out a little bit. We had a nice little weekend blip where we saw volumes and tender rejection rates take a horizontal path for just a minute. Now they're continuing their journey right back up. So up and to the right is the name of the game right before July 4th. So again, significant increases in both tender rejection rates and tender volume. So all the way up to about 14.56% on the tender rejection rate. This is not that unexpected on the tender rejection side, of course, as we're still entering that holiday period. So we do expect some tender rejection rates to continue to increase throughout the first part of the week at least. Tender volumes, somewhat of a surprise though. So we're still seeing volumes increase pretty dramatically, about 1.16% day over day increase. That's on top of what's already considered a very elevated outbound tender volume index at 12,673 on its way to that 13,000 number. So it's, we may yet hit that, and we, considering the environment we're in right now, it's certainly all bets are off. So looking at, are these volumes happening this week? Well, actually, for the most part, they are. We're not seeing a big expansion on the tender lead time just yet. So right here in the blue line, we've got our tender lead time index, which measures the difference between tender date and requested pickup date. We're still right around 2.6 days from a requested pickup. So a lot of this freight is still supposed to move this week that they're sending a lot of these orders out for. So we're not seeing, as much freight being pushed off into the future as we normally would. We do expect here in the next couple of days, though, that those tender lead times will start to expand, and again, dramatically on top of those volumes. And if you look all the way back to July 4th last year, it took until about July 1st, July 2nd to see a lot of expansion in this tender lead time to push some of this freight onto the next week and see a lot more expansion, although July the 4th is on a Saturday this year, so that may have a little bit of a discrepancy there. But again, tender lead times still for this week in freight. So where are we seeing a lot of volume in expansion? So outbound tender volume index broken down by market on our tree map here. We've got Atlanta, Ontario, Dallas, Los Angeles, all showing pretty strong day over day increases. These are going to be the markets that are going to drive that tender volume index higher, faster. Again, Joliet actually showing up on this map for the first time in a while. 4.9%. Chicago, Illinois, finally getting in on a lot of this big market action that we've seen, in a lot of these Southern California markets. Again, shocking that the Southern California region continues to be almost a bellwether for the rest of the freight market and the freight industry, as a lot of volumes driving out of that into the rest of the country. Atlanta over there still getting in on it. We're kind of spread out in the eastern half right now in terms of volume expansion, but still a lot of the big markets growing in volume right now. What's this doing to capacity? Capacity, of course, just about everywhere in the southern tier outside of New Mexico and Mississippi, down there around the panhandle of Florida, is showing some form of significant increase in tender rejection rate. So again, you should not have a lot of trouble on the spot market right now finding those loads this week. We're seeing a lot of upward pressure on those rates, of course. But again, almost the entire eastern half of the country showing some sort of tender rejection rate increase. And again, out here on the far west, continuing to show some strengthening. So a few of the markets we're seeing: Knoxville, Nashville, Tennessee, showing one of the strongest increases in tender rejection rate right now. Breaking down the Knoxville, Tennessee market, you can see that volumes actually kind of came down. Tender rejection rates still on their way up. That's going to be indicative of what we see for the rest of the week here as we move towards the July the 4th, because it's going to be more about supply than it is demand throughout the country. And a lot of those networks are starting to get significantly disrupted by all these volumes moving all over the country. So Knoxville, Tennessee, what to look out for there. A lot of mid-haul freight, a lot of regional freight coming out of Knoxville, and that's where we see a 28% tender rejection rate. So again, anybody operating around Tennessee right now shouldn't have any trouble finding some spot freight, and that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
I'm excited to be here with Andrew Cox for your shipper update. Andrew, what's happening with the consumer?
Anthony, so we got the consumer data in for the month of May. Again, this is lagging data. We've been talking about that Bank of America data for the last couple weeks. So if you had been seeing that, you would have a little bit of insight into what we saw here on the consumer data from the government. Popped off in May, a big rebound, the record rebound up 8.2%, which is really good. I mean, it's expected after 2 months of record drops. This is, again, just a continuing story of record drop, record raise, a quick bounce back. But again, we're still quite below where we'd like to be in a normal time. And I think there is some headwinds ahead of us. I did put out on the DHL Supply Chain Pricing Power Index last week that I thought this freight surge could continue after the 4th. And that's because of this consumer data. I think that the consumers will continue to increase spending throughout the year, but I think it will come at a much slower rate. It can't come at this 8.2% month over month. But here's one of the changes that I'd like to see as kind of a headwind here. You can see in April we had that $1,200 check, the stimulus check to everyone. You had increased unemployment benefits. We've now seen that kind of recede a little bit. You're not seeing, there's no more stimulus checks coming out, but that was kind of picked up a little bit by the unemployment benefits. But either way, personal income dropped 4.2% in May.
Right, Andrew, that's one of the big parts is that one-time check. And there's been talks of other checks potentially. Of course, that would be a shot in the dark whether anything like that passes, but certainly if we did see another check, a secondary check come through in the economy, this could potentially boost some type of spending in the future. Yeah,
no doubt. There's a lot of talk now. It seems that the bill's been passed in the House and they're moving to the Senate. The Senate Republicans are going to be looking at that $3 trillion stimulus bill. It's seeming now that they're being more pressured to do so. We were seeing this second outbreak in cases and kind of expecting now that we may see that second or the third, I guess, stimulus now. I mean, they just keep coming with it. I'm expecting that they will pass this. One thing that I did want to talk about in relation to all this is the savings rate. We talked about it back in April where it just exploded to the stratosphere up to 33%, by far the highest we've ever had in the States. That come down this month a little bit. Now it's just below 25%. Expected, again, things are pulling back a little bit. You see income falling, consumer spending coming up. That brings the savings rate down a little bit.
Right, and you mentioned some of the pullback earlier, and one of the things that we are seeing right now is some of the larger metropolitan areas that were reopening, Texas, Florida, parts of California, now starting to slow their reopening plans. I know Arizona put some pretty heavy restrictions on future activity. So it's looking like some places that were planned to reopen, surges started happening, and they're rolling it back by at least 30 days.
Yeah, it's tragic, truly. You know, anecdotally, I have some friends. I got a big summer trip planned down to Florida. Now they're looking to cancel that trip. Now the beaches are probably going to be closed. All the bars are closed. It's a tragic thing that this has happened. That we reopened possibly a little too early, or we didn't have the right precautions in place. I am hoping that the second wave of lockdowns that are going to happen, that it's less severe than the first ones. I think that the new data that we have on the coronavirus can point to that maybe it's not as dangerous for the younger people. That they could go out with a mask and social distancing and be able to still keep the economy going, maybe a little bit different for the elderly and the older population. But I do think this one will be a little less severe, which is good economically. But I do think there probably is a second wave of lockdowns coming, most likely nationwide, except for maybe the areas that have really been hit hard in the beginning, like New York and New Jersey.
Andrew, thank you so much. Seems like there's a lot in the air right now, a lot of volatility. Appreciate the update, and thank you so much for tuning in. That's going to do for this FreightWaves update for Tuesday. Be sure to tune in a little bit later for our midday market update. And if you're looking for a little bit more content, check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.